Hello there. Welcome to the second video of Accounting Concepts and Convention. I am Dr. Shweta Bhatnagar from Department of Commerce. In the previous video, we have talked about the 7 important concepts of accounting. Let us quickly go through the list. The first concept that we talked about was business entity concept or separate entity concept. The second one was money measurement concept. Then we talked about going concern concept and accounting year concept. After that, we talked about duality concept. Then we talked about cost concept and revenue recognition or realization concept. Moving ahead in the line of the accounting concept, the next important concept is accrual concept. Accrue means due. So, a recording of transaction in the year which they fall due. It's not that when they are settled, there might be some carry forwards of the business transactions also. This might happen to us in our real lives as well. Not everything is settled at the point of the transactions. Certain transactions are carried forward in future. So, sometimes this carried forward is from one accounting year to the other accounting year. So, this principle is very important for those transactions which are moving from one financial year to the other financial year. Now, let's say for example, my insurance premium is due in the month of March, but due to some reason it gets deferred to the month of April. So, it is due in the month of March, but I am making the payment in the month of April. So, which year I am going to record it? Because the accounting year is changing after March. I am going to record this transaction as per the accrual concept in the month of March itself. Although I will not show it as a settled transaction, I will show it as an outstanding transaction which is to be paid in the next year. So, the concept of prepaid and outstanding, they come into picture because of this fundamental accounting concept called accrual concept. Let's say for example, if the firm received goods costing 20,000 on 29th March 2020, but the payment is made on 2nd April 2020. See, the accounting year is changing. So, the accrual concept requires that the expenses must be recorded for the year ending 31st March 2020 and not to the next year. Although no payment is made until then, since the service has been received in the accounting year 2020, the person to whom the payment should have been made will be shown as creditor because the payment has not been made. So, the person towards whom the payment is to be made is to be shown as creditor. So, this payment of 20,000 will be shown as creditor payment in the liability side while closing the books on 31st March, whereas this expenditure of 20,000 will be recorded in P&L in the same financial year. The next concept is matching concept. So, the matching concept is important to derive the profit and loss picture of the business. So, what you are matching in this? You are matching the revenue with the expenses pertaining to the same financial year. So, to derive the profitability of the business, all the expenditures of a particular financial year should be matched with the revenue earned for that financial year. Let's say for example, the transactions that happens in the month of July 2020 is that sales for cash and credit 2,000 and 1,000 respectively. Against this there are salaries paid 350, commission 150, interest 50 and rent paid 200. So, the revenue is cash sales plus credit sales, that is 2,000 plus 1,000. To earn this revenue, the expenditures that are incurred are 350 plus 150 plus 50 plus 200. So, against a revenue of 3,000, the expenditures of 750 are incurred. So, the net profitability is revenue, that is 3,000, minus expenditure, that is 750. So, the real income is not 3,000 rupees, but after deducting the relevant expenses. So, the true profit for the business is 2250 and not 3,000. Moving on to accounting conventions. Now, convention is basically a group of people, large group of people following the same practices. So there are 4 very important conventions of accounting. These are the general practices adopted by people all over the world. The first accounting convention is conservatism. That's a very, very important principle or practice of accounting. Conservatism means providing for all anticipated losses and expenses. Please pay attention to this thing, anticipation of losses. We are not anticipating the incomes and gains, but we are anticipating losses and expenses. That means preparing the business for bad times. So this principle says that all the anticipated expenses and losses of the business should be recognized in the books of account. And this gives rise to the practice of making provisions. Just like your mom and dad makes provision for the monthly expenditures that they anticipate that are likely to happen. So they, from their income, they keep aside the portion of money which is to be spent on the said heads of expenditure. Similarly, there are certain heads which are supposed to earn less money than what is written in the books of accounts. Let's say debtors. Not all the debtors are going to pay on time. There will be some portion of debtors that might not pay, that might delay the payment. So that might create a liquidity crunch with the business. So to keep the business position comfortable in terms of working capital, the business practices providing for bad debts or providing for doubtful debts. The next accounting convention is consistency. That means uniformity of recording the transaction as per a particular method or format. So consistency is important to maintain the uniformity of business practices year after year. And what impact this uniformity makes on the books of accounts? That you can compare them over the period of time. The first year performance can be compared against the second, third, so on and so forth. But if you keep changing the methods of recording the transactions in the books of account, the method of accounting, it might create a discrepancy in comparing the results of the business. The next important practice is materiality. Business should open all the important material information and it should display it in its financial statements. That is what the concept of practice of materiality is. It should lay all its cards on the table. That means all the important material information that influences the decision of the stakeholder of the business. It could be the internal stakeholder, it could be the external stakeholder, but when an information is important to affect the decision of the investor or the stakeholder, it should be disclosed by the business. So all important material information should be disclosed by the business. Here I am talking about the 2 principles simultaneously. I am talking about the material information and I am talking about the disclosure, which is the next convention of financial accounting. Full disclosure. So the business should disclose all the important financial information because ultimate objective or ultimate purpose of preparing the books of accounts is to disseminate the financial information to the stakeholders. So it is very important that the business should identify that what all material information is important for its stakeholders. It should be properly or completely disclosed in the statements which will be produced for as information source for the stakeholder. So when we conclude the accounting concepts and conventions, let us talk about a simple statement about them to summarize them. So when we talk about accounting concept, it refers to the basic assumptions that serves as the basis of recording the business transactions, right from objectively defining the business and owner relationship to identification of accounting transactions which are to be recorded in the definite accounting period based on the principle of duality, such that after recording these transactions, particularly the asset, at historical cost, revenue of the business is recognized and matched with the relevant expenses incurred. So this gives you a gist of all the important accounting concepts. When we merge all the important accounting conventions into a summarized statement, it is: a business should fully disclose all the relevant material information, which is both qualitative as well as quantitative. in a conservative manner with consistency. So with this, we come to an end of our discussion on important accounting concepts and conventions. Happy learning to all of you.